Welcome to In Depth for a look at what is making mining headlines in the Americas. 9 months after the earthquake and tsunami in Japan, which killed thousands and caused the worst nuclear disaster since Chernobyl, the uranium market is yet to recover. Though prices for the nuclear fuel have stabilised above $50 a pound, the near to medium-term demand outlook is still murky. Two of the world's biggest producers reported their financial results for the September quarter and gave their thoughts on where the market might be headed. Mining Week's deputy editor for North America, Matthew Hill, who is based in Toronto, Canada, joins me to give some insight about them. Matthew, how have producers been faring in the new post-Fukushima paradigm for uranium?
Yeah, well, this past week we saw two of the bigger uranium companies in the world report their earnings for the third quarter ended September 30th. And Uranium One, which has the bulk of its production in Kazakhstan, reported a swing to profit for the quarter. They reported earnings of about $45 million compared to a loss of a similar amount in the same quarter last year. And then Cameco, which is the biggest producer in the world, they announced that they had a $39 million profit, which was down 60% compared to a year ago period, but on an adjusted basis, their profit hit $104 million, which was a 30% increase. So things undoubtedly are tough for the producers after the disaster in Japan, but I mean they still certainly are making money. Cameco's got most of its production locked into long-term contracts where the price of uranium is those contracts are currently selling uranium for around, well, north of $60 a pound, just under $70 a pound, whereas Uranium One has a lot more exposure to short-term contracts or the spot price, but they have significantly boosted their output of yellowcake from a year ago, so that's where they've benefited.
And what are executives expecting for the future of their companies?
Both Uranium One and Cameco this week struck a note of caution on the uranium market going forward. I think now things have, as you say, we're 9 months down the line from after Fukushima, and I think people are starting to get a better handle on what to expect from the uranium market going forward. Uranium One, for example, said that they think that the effects of Fukushima are still going to linger for another 1.5 to 2 years before the market starts to see any substantial uplift. Cameco also said that there's a lot of uncertainty which they expect to remain for the short to medium term in the uranium market, and the problem there is nuclear utilities in Japan are operating way under their capacity. There's currently only 11 reactors out of the 54 they have built which are in operation. That means that they're not using an awful lot of uranium, and Cameco said that some of that production, some of their sales to those Japanese utilities will be deferred and has been deferred. And then of course you've got the broader economic slump that's going on in the world with the stock market, the hang of a lot of uncertainty there, and that's certainly not making things any easier for the uranium market.
Producers have said repeatedly over the past couple of years that the spot price needs to be at least $70 a pound to justify building new mines. When might we see it return to these levels?
Well, I guess that is a very good question. There's a general expectation amongst producers and analysts that uranium prices have to tick up, otherwise companies aren't going to expand production. And bear in mind that at the end of 2013, beginning of 2014, the agreement between the US and the Russians where America's downblending old Soviet-era warheads to produce nuclear fuel, which then goes back to Russia, that accounts for over 1/3 of current uranium supplies globally. And when that comes to an end, that's going to leave a gaping hole in global uranium supplies. So it should provide a significant updraft for uranium prices. Some analysts are saying that the $70 a pound level might come as soon as next year, and I think that that's not an unreasonable expectation. It just really depends what happens with the inventories that these Japanese reactors hold, and then also Germany, which has also said that it's going to phase out nuclear electricity generation by 2020. So I suppose there's still a bit of uncertainty what's going to happen to all of that uranium, and uranium prices won't likely show major increases until people know what is going to happen there. But I think come next year, certainly there's going to be some increase from current levels, which on the spot market are sitting around $52 a pound. As Uranium One pointed out on the earnings call, prices have stabilized between $50 a pound and $55 a pound, which indicates that there might be an equilibrium in the market at the moment. So when new reactors start coming online in China and Russia and even India, that's going to cause an increase in demand. When the HEU agreement between Russia and the US comes off 2013, 2014, that's going to cause a pretty big drop in supplies. So that's certainly going to mean higher uranium prices.
There's also been a bit of corporate activity in the Canadian uranium space. Tell us what's happened there and what it might indicate for the future outlook.
That's another important point. Despite the fact that there's so much uncertainty in the uranium market, it's been given a pretty big vote of confidence. Firstly, from Cameco announcing their hostile $520 million Canadian bid for Hathor exploration, which owns the Rough Rider deposit nearby their operations in northern Saskatchewan. People were watching very closely whether or not a white knight bidder would emerge, as Hathor had indicated. They were pretty confident that would. And in the end, Rio Tinto, which is also another significant uranium producer, did come through with a bid 11% higher than Cameco's bid, and that was enough to convince Hathor's board to accept it, and they recommend shareholders should also. Hathor's share price on the TSX is still trading quite a ways above what Rio Tinto is offering, so it's unlikely that shareholders are going to be tendering into Rio Tinto's friendly offer while they can still receive more money on the open market for their shares. All eyes on what Cameco's next move will be, whether or not they're going to jump in and up the ante. They were tight-lipped about what they were going to do, obviously on their earnings call. But quite interestingly, people took note that they had increased their revolving credit facility by about $700 million, which gives them quite a bit of powder in their keg to do something with Hathor. As some people have speculated, there is also the chance that Cameco CEO Tim Gitzel gives Rio Tinto's management a call and says, "Hey, you want Hathor's uranium production, which is only going to come in about 2016, 2017. So does Cameco. Why not strike a deal where they put in a joint bid for Hathor exploration?" And that also will solve some problems that Rio Tinto might run into when it wants to put Hathor's Rough Rider deposit into production, where Canada's currently got a policy where they don't allow foreigners to own producing uranium assets in the country. Rio Tinto is of the opinion that Canada will either change this policy by the time Rough Rider starts producing, or make an exception to the rule. But making a $575 million bid for a company is a pretty big bet that is going to change. They could hedge their bet by taking Cameco on board, and then of course Cameco has got all the skills and expertise of mining uranium up in northern Saskatchewan, which can be very tricky, as they learned with their Cigar Lake mine, which has run into some pretty significant technical problems over the past. So certainly there's benefits for both parties if they were to strike such a deal. Whether or not they will be able to come to, whether or not firstly Cameco would be keen on that, Rio Tinto also on the other hand, that's to be determined. And then also of course whether or not they will be able to see eye to eye on what such a deal might look like. But definitely one of the more interesting developments in the uranium market to look at. And then of course don't forget you've got a lot of speculation going on at the moment that China's big state-owned CNGP is in talks to buy Kalahari Minerals, which owns the biggest stake in extract resources, which in turn owns the massive Husab uranium deposit in Namibia. There's talk that they're still trying to thrash out a deal. So that shows that even though there's a lot of uncertainty in the uranium market, there's still also a lot of confidence in its future.
Thank you so much, Matthew, for your time. That's the show for today. Join us again next week for more news and insight on mining in the Americas. I'm Martin Joaquino for Creamer Media in Johannesburg.